Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, I'm going to reveal where I'm going to start unloading some of my long-term gold holdings when price gets to this level. And I'm going to show you on a technical analysis basis why or how I arrived at that target. Now, before we do that, we're going to take a quick check-in on gold to see where it's trading based on shorter term technical analysis. And remember, long-term technical analysis, that's where I start to look at saying, okay, where do I want to take a little bit off the table on my long-term gold holdings, while shorter term analysis is more based on, okay, is it going to go up or down in the coming week or weeks, and what levels are we watching, right? All right, so let's dive into the charts here. This is your daily chart of gold. And what we see on gold is you have this trend line, right? It goes back to April, the April lows, which remember, that was a little sell-off in gold with the Liberation Day sell-off and period of sell-off in the stock market. Gold then roared back, which it should have, right? Again, more uncertainty with the tariff situation, and then has really continued to go sideways, breaking below this trend line. Again, notice low pivot to low pivot to low pivot, breaks, then it becomes resistance, resistance, and lo and behold, resistance and resistance. And now what we've seen in the short term, we have this little basis point. See how, again, we had this sideways consolidation and then a little pop into this trend line again, and then it backs off. And so that's really your short-term resistance area, right? So again, we're looking at around 37.25, 37.30 as upside resistance in the coming week. Now on the downside, as long as gold holds above this 36.45 to 36.25 level, then gold is honestly still viewed at as being near-term bullish, all right? Near-term bullish. If it breaks this 36.25, it does open the door for a little bit more of a correction, but I strongly encourage people to not assume it's done as a long-term asset, all right? So again, overall pullbacks would be buying opportunities for me at the right levels. For instance, big level would be right in this zone, right? So if we take this chart and we have this high pivot, which is the previous all-time high from April, and we drag a zone across, you can really see how this would become your buy zone if this one breaks, because again, highest pivot and then all of these other pivot highs before the recent breakout. So the idea here is resistance, 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 breakout. If it breaks this short-term level, then it comes back into this area, and this would now be technical support. And that would actually be where I would start to accumulate some near-term long positions in gold should it get there. All right, now we've discussed near-term, right? So very near-term, we're watching this 36.45 to 36.25 level. If it breaks this area here, then it starts its bigger corrective move, which honestly would only be about $100, $150 drop to the downside. On the upside, the 37.25, 37.30 line is your upside resistance, okay? Now, the next factor here is saying, okay, well, what about long-term? And I obviously, in this video, the highlight of this video is this next portion where we discuss where I may take some of my longer term gold holdings off. Now, I've been buying gold since really 2021 aggressively. I've had smaller gold holdings before that, but I would say my dollar cost average is in the $1,800 to $1,900 range on gold. So really about 100% of upside achieved at this point. But the question is how much higher until I start to think about taking some off the table, right? Now to answer that, we need to go to a bigger time frame. So I flipped over to the weekly chart. And I'm actually going to flip over to the logarithmic chart because this gives us a much clearer picture when we go back a long, long way, i.e. going all the way back to the 1970 run up in the bull market and the top out in 1980, and then obviously the 2007 high here. Now, one of the things I love is my parallels. You guys know I'm a parallels. And what I do is I find a major beginning point. And what I'm going to take here is the first big kind of bull run in gold that we saw in the kind of the mid 70s. 1976, we bottomed out around $100, and we had a big rally up all the way to about $900. I would say that's a major move to the upside. And so what we do is we take that and we put it to the next bull run low, which was right here in 2001. And from 2001 to 2011, in a 10-year period, gold went from about $260 all the way up to a high of 1900, right? So again, big move there to the upside. What we do is we extend out that trend line, and we're going to use a parallel here to guide us a little bit. And what we can see is that when we connect those and we drag it up, we drag it to our highest point, which happens to be the bull market high from 1980. And so we're using the low from just prior, the beginning of the bull market low there, to the high here in 1980. And what that does is it gives us an upside projection of just over $5,000 per ounce, around 5,200. And the idea here is that we're utilizing this bull run, right? And then this bull run here. But then the idea is you have your next bull run that really started. I mean, you could argue it started, I mean, you could say 2015, but really I would say the bigger move began in 2018. And what that does is what we notice here, right? So we have here was a 5-year from 75.76 to 80.81, about a 5-year bull market. This bull market was about a 10-year bull market with obviously a lot longer in duration, but kind of a slower grind. And the idea here is that we're probably in the midst of that same sort of slower grind, right? If you compare bull markets, this one was a slower grind. It kind of looks the same way here from 2018, and then it kind of goes sideways, much like here in 01, it goes up and then goes sideways for a bunch of years right here before that next leg to the upside. And so that, again, it looks to be what we're facing here. You had this 3-year run into 2021, sideways consolidation, and now the remainder that would take us to about 2028. And so really, in theory, we're almost at 2026. You'd basically say in the next 2 years or so, gold should move above $5,000 an ounce and ultimately tag this 5,200, 5,300 level on the logarithmic scale. Now, one last thing to just take note of here, which I love to do, is we always look for variations or adjustments. And what we could do here is we can really say, okay, well, what's our best case bull scenario? So we have our kind of base case, right? Our base case is 5,200. But what we can do here is we can connect our low from 76 when gold was $100 an ounce and connect it to this secondary major pivot high. And what we get is around 6,400. So essentially what I'm telling you guys, remember the thesis of this video was, where am I going to start? Start being the key word, unloading some of my longer term longs on gold. And the answer is I'm going to start around 5,200, maybe just above 5,000, taking a little bit off the table. And then what I'm going to do is, as gold goes up, maybe every $500, I'll take a little bit more off the table, a little bit more, until we achieve that 66,400-ish upside target zone. Now, once that's achieved, I'm not going to have sold all my gold because I think that's foolish to unload all my long-term gold at that point. But what I will do is have probably at that point a quarter of my overall position left, which I can just let ride at that point with lots of profits. I mean, we'll be talking about, 200-300% gain at that point on gold from my buy zone. All right, so I just wanted to pass this along to you guys, my thought process, how I'm arriving at these target levels on gold. I think, again, it's fascinating stuff. It doesn't mean it's going to necessarily be the top on gold. Obviously, I'm a big long-term bull. But again, we always have to base our decisions on not our hopes and dreams, but on reality, which, again, charts give me the best picture of reality without emotional kind of variances. All right, you guys have a great afternoon, great evening, great weekend, great day. We're going to rock it this week. Come find us at verifiedinvesting.com.